Hey everyone, Danny Greco here with a quick note for you. So I'm not directly involved in working with rentals or leases or anything like that, but I know anecdotally from hearing other people's experiences or being a landlord myself, as crazy as the housing market is, it sounds like the rental market is just as insane and is, if not maybe even a little tad crazier as well. And it's just interesting. Rents are doing nothing but going up. I mean, that's just what's happening, especially in our area as inventory remains low and it's really hard to build anything new. I will say that is a little different. Maybe if you're looking at condos and apartments versus that thing, but for single family homes, even townhomes, just rents are doing nothing but going up. And there's a fear that we're really kind of becoming a renter nation with the lack of housing affordability or affordable housing and inventory and that sort of a thing. So I have some clients who I wish I had done this, my first time buying a house as well, who are kind of looking into that house hacking method where you buy a house, buy a property, maybe a duplex or something like that, although it can be any house, and you rent out a room or a separate unit or something like that to help subsidize your mortgage. And maybe instead of having a $4,000 a month mortgage, you have a $2,500 or $2,000 or whatever it is, which is a great way to really accelerate that wealth building, so that when you're ready to vacate that property 5 years, 10 years down the line, whatever it is, now you can rent out both units and really be cash positive at that point. So it's really, I know that it's especially in the Seattle market, we are not, from an investment standpoint, we're not a cash flow heavy market. You're not going to buy something here and get cash on cash returns above 10%. I mean, in fact, if you can get 5%, that's not bad. So we're not a strong market like that. We're going to buy something and get $1,000 a month cash flow off a minimal down payment or anything like that. We're a different market that really focuses a lot more on the appreciation down the line. But regardless, rents are doing nothing but going up. So if you do have a interest in purchasing something, and then renting it out down the line, I know the numbers right now may not look great if you were to convert that to a rental right now. But when you're ready to leave that property 5-7 years from now, whatever it is, I promise they're going to look a lot more favorable at that time. I just have a client who purchased a new home after buying one that I sold to him 4 years ago or so. And they're able to make probably $850 a month over their mortgage amount. Now, that's not anything that's going to make them rich by any amount, but if you're able to make $800 a month and the home is appreciated $150,000 in 4 years or whatever it is, why trade that in? Why cash that in? You're making $10,000 a year. Your assets appreciating. You've kind of got the best of both worlds working for you, and it's only going to continue to get better. So I think that's really what they kind of, in their example, realizes, hey, we don't, if we were to sell this, yeah, we could do so and do so quickly, but what are we going to do with that money? And if you don't have a great plan for it or know something where you're going to get better returns on that, not a bad way to make some extra cash flow and let that asset continue to appreciate too. But rents are always going up, so even if you're a first-time home buyer, I wouldn't, personally, I wouldn't be looking at the future of being any brighter in terms of rents staying low and buying it something comparable to what you're paying in rent or anything like that. So anyway, we'll have more to come, and of course, will be interesting to track how that all works out too. So take care.